Hello everyone, this is Evan here from the Trade Risk on Wednesday, January 25th with a midweek market recap video. We're going to cover all of the major markets, the current market environment, and then finish off the video with some sector analysis. Still going to skip some of those individual names at the end of the video just because we have a lot of earnings dates coming up. So let's get into it. S&P 500 finished up 86 basis points, almost 1% on the day, and we got Dow 20,000, something that maybe not you were waiting on, but certainly a lot of the media was waiting on, and something that we crossed today. Put out a post. It's obviously, for those of you who are watching markets every day, which is probably most of you guys watching this video, we know that Dow 20,000 isn't technically significant, right? Nothing that we're going to do today is really going to change just because we crossed that number. But for the average retail mom and pop and someone that just doesn't spend a lot of time looking at markets, that's a headline that is going to get into their world. They'll see it, and that'll stir up at least some conversation, some noise about the stock market in general. So with that, let's get into some technical levels and what's been going on with this market. So yesterday and today, important here in the S&P 500 because we did get a technical breakout. We were sideways for 5 or 6 weeks, right? 26, 27 trading days in this range, right underneath all-time highs. We couldn't break up, we couldn't break down, and it was just a stalemate as far as movement goes. Yesterday was the day to take notice, the 24th, that was Tuesday. So if we look at what happened here, not only did we get an all-time closing high, that is important, but if you actually dial it back to Monday, I think this was an interesting subtle clue here. Monday, we started the week off selling off, trying to sell off, and on an intraday basis, we made it back down to the lower 225 area, and that's a point at which we have sold off. You can see all the tails down here multiple times in the past. Generally, the more times you test the level, the more likely it is to break, and yet again, we saw that that level held, and we bounced higher, finished down on the day, but still 60, 70 cents off of those lows, or even $1 off of those lows. So that was important, combined with the fast kind of sharp follow through reversal higher yesterday. I think that in combination, that kind of 1-2 punch where you had the reversal, then you had the follow through to the upside. So it was a little bit of a shakeout, kind of that final shakeout, which again is all hindsight analysis. We don't know this going into it. Couldn't predict that a breakout to all-time highs was coming here on Monday. But when you start to put the clues together, you start to see how we get to where we are. So the breakout yesterday with that reversal made it more encouraging, new all-time closing high, and a post that we put out yesterday with the advanced decline line with market breadth supporting this move. That is also very important. So it wasn't just 4 or 5 big stocks kind of pulling the market up higher. It was the small caps participating. It was some of those sectors that have been so stagnant recently starting to emerge on the upside. Get all those factors together, and then you get this type of breakout, and then a very nice follow-through move today to all-time highs. So go to the weekly chart. You can see we're in great shape here across the board. S&P 500, the IWM now you can see trying to emerge. NASDAQ 100 is running away with it. It has been, and now if you look at the Dow too, breaking out to new highs. So that's the weekly time frame. Larger trends look good. And remember, this is coming from analysis where all in here for the past 6, 7, 8 trading days, the message that we were sending out was sit on your hands, wait for something to happen, wait for the resolve to happen. It wasn't a point to get too aggressive. We were very dialed back. Yesterday we did buying. That was our signal to start increasing our exposure on the long side yesterday, and today we're sticking with it. We actually picked up some new things, scaled out of some other things, so we're starting to rotate back into this bullish mode that we've been that we're newly sort of building upon as of yesterday. Yesterday we picked up SPXL, that's a 3x bullish ETF at the close here on Tuesday. It was up 2.5% today, scaled a little bit out of that, but we're continuing to let that work. So that's sort of the new game now. As we have this resolve to the upside, we're looking to be long this market. We do have earnings that we're basically still at the first, second inning of earnings season, so expect those not headwinds, but influences on the market to continue to sort of creep up here as companies start to go through their earnings reports. So that's the way we're looking at the market. That's the way we're playing the market. And that's also the way we're looking at it. Upside resolve. Things look good. Doesn't have to be as smooth. It doesn't, not saying it has to just a rocket endless bull higher here. There can clearly be volatility, back and filling, and everything else that markets tend to shoot our way. But for now, things look pretty good. IWM, again, you can see trying to resolve, hasn't hit new all-time highs, but it's trying to start to clear some of these recent highs if you've been flagging out now since the beginning of December. If we can see more follow through very quickly, just another point or two above us is all-time highs. NASDAQ 100, again, strong gap higher, maybe a little bit extended, but still has plenty of momentum behind it. And we looked at the Dow real quick today, crossing 20,000 and breaking to new highs after a long period of consolidation of 5 or 6 weeks. I don't consider us that overbought, if at all, in the Dow, in the S&P 500, given how long we've just moved sideways. So with that, let's get into some other markets. TLT sold off today. We talked about the potential of kind of moving sideways in this range. We marked December lows here, and then the highs that we just hit this year about a week or two ago. And moving sideways in between this area, maybe come back down and retest these lows, see if they're good to hold back in the TLT. Seems reasonable. It's a messy spot, though. I'm not interested in really trading that myself. I think, though, if you wanted to, the short side down to perhaps retest those lows is something that makes sense. GLD, gold today, gap lower, but we did close near the intraday highs. You can see coming back to some of these fast-moving averages. This area that we ran up to, this 116 level, was pretty important. This was support all the way back in early first and second quarter of 2016. Might find some resistance there, might lead to a bigger pullback. Not that actionable in the way I look at markets, but something you want to still pay attention to. And silver, kind of similar situation, also running up to this level here, which was supply just back here from December and mid-November of 2016, pulling off a bit, closing near the highs of the session. So maybe the bulls just pick it up and it's a dip that gets bought immediately, but we'll have to see how that all ends up shaking out. Not too interested in that, just a little bit too noisy for me. USO continues to move sideways here. I've been waiting for a resolve here. I think this will be interesting and influence the market when this finally makes up its mind. Really hasn't done anything this year. It's been just trading in between 1105 and 1175 or so, which is still 5-6% range, but needs to kind of get out of here and make either a directional move higher, where the trend would start to take out these highs from 2016, or are we going to roll back over? I think that'll be interesting. We still don't see it yet. It's something I'm paying attention to, though, because I am looking to play the resolve of this range. UNG also perking up a bit today. Contrary to oil was down on the day. UNG was up on the day. This one sold off hard to start the year, and then it's been just bouncing around near this year-to-date lows. You got this little pivot high here, which we rolled over from just a couple of weeks ago, around 850, and then we maybe just put in a higher low last Friday. And a combination of Friday and Monday right here at $8. So you get about a 40-50 cent range. Can wait to play that. It's a little bit messy, not something that I'm too interested. Rather pay attention to USO right now rather than natural gas. Getting into some of the sector analysis, it looks good. There's a lot of things working. XLB completely on fire. We talked about this briefly as it was bumping up against this level right here at $51. You can scroll back and watch about a week ago when we were talking about this level, and it really ignited yesterday to the upside, breaking out to new all-time highs and continuing higher today. So XLB material stocks looking good. Industrials also looking good here. We talked about this level and this move now very quickly to all-time highs. IYT, which had been sleeping for a while. So all of these sectors that had been consolidating and really just sleeping throughout the beginning of this year are now starting to come to life. life. That's what you're really seeing, really see the spirit of the market now kind of pick up as some of these big sectors come to life. Financials not quite all-time highs, but negated this potential bear flag up back into this range. Maybe it still has to chop around some more, but has some momentum behind it right now. XLF looks good. This continues to just break out and cut right through this resistance. Once again, another supportive factor for the market. Technology, XLK, all-time highs, looks great. Semiconductors, same thing, looks great. So plenty of sectors working higher right now. Let's talk about what's not moving so extraordinarily fast to the upside. Is healthcare. Started off the year great, started off the year as the big winner, and that has changed over the past 2 weeks. As you see, it almost gave back all of the gains from the year. I think in fact it did in the XLV. It did have a strong bounce higher today. Maybe it finds some support. If we look at IBB, yeah, you want to see this back over 275, 274, get back above some of these fast moving averages. That would be definitely a spot where you could get more constructive. I think as long as you're under 275, you got to be a little bit cautious. Encouraging to see the bulls step up today, but you really want to see that strength continue. XLU also, this resistance area that it rallied into and just hovered around $49, and the XLU is starting to play a factor here, and it's rolling over just a bit from it. Ended flat on the day, but you can see there's still some pretty hefty resistance right around that 49 level. And then XLE did get a bit of a bounce. We talked about energy being a bit of a laggard here. Remember, oil, natural gas, they got slammed to start the year, or at least natural gas did. Oil sold off a bit and hasn't been doing too much. So energy, another sector that if we can start to see oil move, again, that's why I talked in the top of the show there. If we do see oil start to resolve to the upside, that could play a pretty good influence here on getting this group of stocks supporting this market, working itself higher, and fueling potentially a next future leg higher in the market. So with that, we will end it there. Quicker video. Got some earnings coming out tonight and a lot more later this week. Hope you guys had a great day trading. Thank you for watching, and I will talk to you again soon.